Hi, welcome to the channel. Today we'll talk about the economy. Canada economy has showed reduction in 2025 due to the tariffs. For the second quarter, GDP fell by about 1.5%, with export down nearly 27%. At the same time, unemployment has risen to just over 7%, showing the impact of trade pressures on jobs. Still, inflation is close to the Bank of Canada, the 2% target, with headlines inflation at 1.9% in August. That allowed the Bank of Canada to cut interest rates 25 basis points, which is helping household businesses and the housing markets. Residential investment is growing strongly this year. Also, it's expected to slow as population growth eases. Despite the near-term weaknesses, here are positive long-term drivers. Canada has started exporting the liquefied natural gas, with the first LNG cargo leaving in June. The Trans Mountain pipeline expansion has nearly tripled capacity, giving Canada new access to Asian energy markets. Also progressing with the new agreement signed with Indonesia that cuts tariffs on more than 95% of the Canadian exports. In addition, Canada is moving toward clean energy and technology. For example, Ontario approved the first small modular nuclear reactor in the Western world. Housing and infrastructure projects are also supporting growth, including the Build of Canada Homes program and major transit constructions in Toronto. Financial stability remains strong. Canadian banks are well capitalized and deposit insurance is being reviewed to provide even greater protection. Stock markets have performed well. The Toronto Stock Exchange has returned more than 10% this year and over 26% in the last 12 months. Analysts expect Canadian economic earnings to grow about 9% 2025. And investors also continue to put money in Canadian banks with large inflows into equities, ETFs last year. The weaker Canadian dollars, now about $1.30 is in US dollars, has boosted returns for investors who hold US assets. Looking south, the US economy continued to outperform Canada. In the same quarter, the Canada economy contracted. US GDP grew up by more than 3%. Unemployment is lower, around 4%. Inflation is higher than in Canada at nearly 3%. The US Federal Reserve lowered the interest rate a quarter too. US stocks remain strong, with the S&P 500 hitting record level, driven mainly by large technology corporations. Globally, growth is expected to be modest but steady. The IMF projected around 3% global GDP growth in 2025 and in 2026, with similar number from the OECD. Europe has showed under trade pressures, while China is facing weaker investments. Emerging markets are also softening. China are seeing stronger capital inflows. For investors and households, the message is mixed but not bleak. Canada is facing short-term challenges from tariffs and weaker export, but the outlook is supported by lower interest rates, major infrastructures and housing projects, and the new export opportunities. The US remains stronger in the shorter term, but Canadian assets benefit from a weaker dollar and attractive equity valuations. Globally, diversification continue to matter as growth and risk vary. If you like this video, please share, like, and subscribe. Thank you.